Well, it seems like we are back in meme stonk territory, or is it already over? We've also got a lot to cover with stocks, crypto, macro. Yeah, basically all the main topics that we talk about. Guys, we had GME and AMC that popped, and Roaring Kitty came back, and everybody was all excited. As of today, Wednesday, May 15th, the stocks are already down pretty huge. Is this just the start of another mother of all shorts, or is this the end? We do have stock market indices that are closing in on all-time highs. We've got Bitcoin popping today. What do you guys make of this? Is it the start of another insane bull market, or is this a bull trap?
I have so many questions. So many questions. Like, do we even know if this is really Roaring Kitty, aka Keith Gill, that's been tweeting? There's a lot of different opinions on this. I'm not sure. Like, some of these videos don't really feel like someone who's made, $30 million would need to put up, and like they're scheduled like every 30 minutes that the market's open. So it feels a little bit pumpy for someone that's already kind of made it. At the same time, like, he is known for doing kind of funky stuff like that back in the day. So I really don't know. What if this turns out to be a massive rug pull? What if the account is compromised? Or, what if it's actually a prelude to something bigger? Like, what if Keith Gill gets invited to join the GameStop board? Something that I wrote about actually in the Daily Doe yesterday was that there's an interesting thing that happened at GME back in December, and that's that the company has allowed, or has now set up, the investment committee at GME to allow the CEO and two independent board members to basically direct the $1.2 billion worth of cash on GME's balance sheet into public stock investments. And so what could happen here over the long term is that Ryan Cohen, the current CEO of GME, could end up actually running a investment company via GME. It could be like the same way that Warren Buffett took over Berkshire Hathaway, which used to be a textile company back in the 1940s and 50s. He took that over, shut down the textile business, and turned it into this huge investment conglomerate. So I'm not saying that's going to happen at GME, but that potentially could happen. And what if Keith Gill's involved in that somehow? There's all these crazy scenarios that we can run through, and we just don't know yet. I mean, I think even though the stocks are down today, the party may just be getting started in terms of news flow and stock volatility.
Yeah, looking at his Twitter, this is strange, man. Like, yeah, so GME broke out really big on Monday, gapped up yesterday on Tuesday, and then had a really big gap down today. And if we go down to an intraday chart, looking at the 1 hour chart, you can see a lot of the price action is actually happening in the pre-market. So something strange is definitely going on. I mean, what is this? Like, for you guys that are listening on the pod, we're looking at Roaring Kitty's like Twitter feed, and it's just a bunch of these random ass like Wu-Tang memes and Superman, and I don't know. This definitely is strange.
There was an interesting tweet at the end of yesterday's session. I think his last tweet before the market closed yesterday, that for the first time in the last 48 hours, or really since the first time that he started tweeting again, actually had a ticker symbol in it. He had GME mentioned in the video itself, which was the first time that we'd seen that. It had only been sort of referenced, very loosely. In fact, a lot of people thought, well, maybe he's in a new stock. Maybe this is related to AMC, or maybe it's related to some other new stock that he's now got a position in. And there was also a good argument for him that he wasn't committing any kind of securities fraud or market manipulation because he hadn't mentioned any tickers. Well, again, yesterday that kind of stopped because he actually had the GME ticker in at the end of one of those videos. So yeah, it's a really strange situation. There was also some things that happened a week prior where there was a bunch of unusual options activity in GME. There was a popular stock trader account, a guy that had actually just gone to court for the SEC had taken this guy to court because he had some market manipulation stuff. This is not Roaring Kitty, by the way. This is another guy. I'm not even going to mention his name because I think he's kind of scummy. But he had tweeted the same meme that Roaring Kitty tweeted when he first made his first tweet in his comeback. So it was really interesting because there was the same meme that was tweeted from this kind of scummy trader account as the first meme that was posted by Roaring Kitty. So could there be some connection there? Is this sort of some big pump and dump? there's just, again, so many questions here. We just don't know yet.
Yeah. Nikki, you actually posted a video on this, I think, on your socials, right?
Yeah. It was funny because when one of our community members, I think it was last week when price and GME was kind of getting perky, but they were saying how this is kind of a strange market. And I replied, I was like, it's always kind of a strange market in one way or another. I said, even GME is starting to look interesting. And that's because the price action, of course, I didn't trade it. Like, darn it, but it is what it is. But I did notice that the price action was getting a little perky. And when we were asked about it before, it was kind of like, oh, there wasn't much to go off of in terms the price action looked weak. Before that pop that happened on May 2nd, price action just looked weak and boring. We were making new lows.
Yeah,
And
it
it
was in
just
the
wasn't
long kiss of death.
Yeah.
When you're getting this like low volume, just lower lows, lower highs. Yeah, it's like nothing happens, and then all of a
And then
sudden
on the
back
3rd,
here, yeah,
on the 3rd, it was like, oh, it started to get perky and the price action started to get stronger and stronger. And then we had that resistance zone around, 1815, and it ended up, breaking out of that. So that's when I said, and I was like, yeah, it's a strange market. And even GME is looking interesting here. So, yeah, it went from boring to what's going on, and then boom, it's like, who would have thought that this was going to happen? I don't know if really anybody could have anticipated this kind of move for GME in this week, right? I don't think anybody really had that fully on their radar. Trav, correct?
Yeah, I mean, how would you predict that Roaring Kitty is going to tweet for the first time in 3 years?
Right.
no,
And
guys,
unless you had
don't-
inside information, right?
no, I mean,
Well-
don't you know that the markets are totally efficient? Like
Well, this is
all
what I-
the information is known by all market participants at all times. The college professors were right, guys.
But now that we know this, now that we know that price popped and squeezed and did what it did, that price action last week is kind of suspicious.
Right? Yeah.
It's like, okay, who knew? Somebody knew something here.
Yeah,
Exactly. And that's what makes it so sus for me. And you think if it is really Keith Gill tweeting, why would he risk his reputation? Why would he have tipped anyone off? And so again, I think it's extremely sus that there was an account, a high profile trader account that had posted the exact same lean forward in your chair gamer meme that Roaring Kitty first tweeted when he came back for his, this tweet session. So yeah, I don't know. There's just a lot of questions still out there for me. And it's also interesting, like the classic stuff that these meme stocks are doing, like the AMC. I mean, AMC is such a garbage company with such a garbage CEO. They already sold $250 million worth of capital into the market, more dilution for AMC shareholders. Like, it's just like, can we find something with a little bit more quality to make a meme stock? That would be cool.
Yeah. Maybe
yeah, this
Wayfair.
thing's already down to basically pre-pump prices.
Yeah.
Yeah, well, what I was saying in my post I posted on shorts and on reels on Instagram, I was saying that we've seen these pops in GME before, right? Like, we've seen ever since the big squeeze in 2021, we've seen pops along the way, and they don't usually last. They usually end up getting sold pretty quickly. And I was wondering, okay, yeah, exactly. You have the chart pulled up there showing that. And of course, this pop has broken to essentially like a new high, versus the recent price action. But the reason that I was thinking the selling pressure will be pretty high on this is because there's a lot of bag holders. There are a lot of people that are still holding GME stock from when they bought the big squeeze in 2021, or maybe even, before or after. So what that means is when they see a pop like this, they're going to want to get the heck out, especially after all the pain that they've endured over the past 3 years watching this stock just die. And so that's why I was thinking, well, the selling pressure is probably going to be pretty hard to contend with. But at the same time, I'm also, because there's people thinking, well, what do I do now? Do I buy this? Do I trade it? What do I do with this? And my answer to that is, as I think it's really hard to predict. Like, GME has a mind of its own, or it can have a mind of its own. Like, I'm not even going to try to predict what this thing is capable of or what it's going to do. I think the odds are that price action dies down. Maybe we get a few bounces, a few pops from here. but I continue to think that those pops will likely get sold. But at the same time, I'm not staying super, super biased in one direction or the other on this, because I just think it's crazy. And what this roaring kitty person can do with this stock and its followers is just wild. And we've learned our lesson that you never know. Kind
I
of.
do think there are some interesting angles, and I would still be very loath to short something like this, even though there have been those echo pops that have been faded over time. The piece of news obviously that's new is Roaring Kitty, or maybe Roaring Kitty, or maybe some fraudster that's tweeting. That could obviously rug, but the other situation again is that more news flow can happen here. Like there are things that can happen with Keith Gill getting more involved. There are still things that have yet to play out. Other interesting angles are that, other high short interest stocks are moving. And so there's more of a risk on appetite. And there's definitely, we saw back in the January 2021 squeeze of GME that it started to become kind of this rolling bubble into other high short interest stocks, other meme stocks. We saw it in crypto. I think maybe today we're finally seeing crypto getting a little bit of that risk on love, because it had been underperforming versus the meme stocks here early in the week, until today at least. So there's still a lot that can play out here. And there's definitely some newer angles here with the Roaring Kitty account tweeting. So I'm still, for me, like it's a don't touch from the short side. And, there is high implied volatility in the options. So, there are strategies potentially there, but again, it's so hard to know how this thing is going to play out in the short run.
I kind of feel
yesterday
like
in the pre-market, I actually tweeted, I said, GME trading $69 in the pre-market, enticing to short this crap, but ape's gonna ape. So I was looking and I'm like, man, like this is a technical like short setup. You can see here on the chart, you can barely see it. It was like, when you're looking at a daily chart on TradingView, it doesn't show you the pre-market action. So I actually posted like an hourly chart where you could see the extended trading hours. And when it was up here around resistance, I was like, man, I wanted to short that sucker so bad. But I'm like, dude, this could rip another 50 to 100% in a day. And I just didn't accept the risk. So yeah, it's one of those woulda, coulda, shoulda things. But again, when I don't have a huge edge and I don't really know how to manage risk, I'd rather not lose money than make a lot of money and get lucky.
Yeah, I was going to say I would probably be more compelled to try to pick off bounces or longs over trying to short this right now. Like, I just don't think I could short it.
Well, not now. I mean, it's already down quite a bit from the highs. Let's see, from the pre-market high, it's actually down. Yeah, already down like 55 to 60%. So shorting after the big legs down have already happened. And again, all the action is actually happening in the pre-market. So
yeah,
the regular market hours are kind of boring. I think if there was a pump and dump, Trav, like you were saying, like something fishy here, I think it's already happened. I think if either Roaring Kitty or if somebody else got a hold of it and they're like, dude, all we got to do is post a bunch of memes and these idiots are going to just ape into it. Now, like you said, does that have some kind of follow-on effect where there's something else that comes of this? But if I had to guess, I would say the pump and dump is already over. What do you guys think? Do you think it's over or do you think this is just starting?
Yeah, if Roaring Kitty's account has been compromised, then we're probably closer to the end. If it is actually him, I still think this has a ways to go to play out.
Okay.
Because he's hinting at something, and there's something there. There's something else that's going to come of this as far as his tweeting, if it really is him. And again, the whole investment committee thing is interesting. GME, for instance, let's say the stock spikes, or even if they were to raise capital here at these levels, they could raise a couple $2 billion, obviously with some dilution, but they could add more cash to the balance sheet. And all of a sudden you have a war chest, and the whole retail gaming and collectibles business doesn't matter at all. They could shut that down. And all of a sudden you have a holding company with a couple $2 billion and meme guys like Ryan Cohen running it. And so that could go to any crazy number, right? I mean, it's like the thing that people can extrapolate on that is like, you're up to your imagination. So yeah, I think it very much depends on whether it's actually Keith Gill tweeting or not.
Yeah, well said. Okay, let's move on. So What the other major topic that happened this week is GPT 4.0 came out, and I was actually super impressed with this.
Yeah.
The real-time chat, the responsiveness, the speed. One of the big, they did an announcement, and one of the things that I thought was just super compelling was the real-time like translation, and just allowing people to sit side by side that speak different languages and instantly translate. I think this is going to kill a lot of competitors. And I was just also super impressed with the ability to talk to it and then have it do like create code. So one thing that I did was I had my phone up and I was talking to it. And then I said, hey, create this kind of indicator for TradingView where the goal is to show like a rolling Kager, something kind of simple, but I wanted to test to see if it could actually get the code right, because previous versions of ChatGPT have just been really buggy and it's still not perfect. I had to do some error. I said, hey, I got an error, go back and fix this on line, whatever. But it actually built the indicator and it was great. And I'll just show you guys that are watching the video. We've got, the indicator on price action, and then the code down here. You can see it took me like 26 iterations to get exactly what I was looking for, but it was pretty cool. So I've just been seeing a lot of like new use cases. Trav, you even sent us one this morning, a guy that was basically automating like technical analysis in different ways. Have you guys dug into this? Any opinions on it? What do you think?
Yeah, I mean, I think one of the very cool things about, 4.0, and I think that's honestly kind of a stupid name from a marketing perspective. I feel like they could have come up with something better. But besides that, I think it's pretty cool because you have this multimodal interface. So now the, ChatGPT 4.0 can read images and audio and things like that, and then use that, like you're saying, in a real-time translator. In the case of the guy we saw on YouTube he's taking stock charts. And so 4.0 will actually be able to visually see the stock chart and then break down technical analysis indicators based on seeing the stock chart image, rather than having to feed it in, price data or something like that, which is probably more complicated. It can literally just read the chart image, which is very, very cool and much more human-like. And so, yeah, there's a lot of really interesting things that are going to come of this. The real-time translating thing is cool. I remember there's a couple of sci-fi movies over the past few decades that have this, where there's an earpiece in someone's ear and you can talk to someone in a foreign language and it's translating in real time. We've never really had that, but I think we're like on the cusp of having that, which is so freaking cool. The tutoring stuff that they showed with 4.0, being able to get like literally have like, geometry pages, or, on a tablet on your, iPad or whatever, you've got math problems or you've got other school problems, and you can mark them up while ChatGPT is looking at what you're doing in real time and giving you feedback. Oh, well, no, that's not quite correct. Consider this, or, here's the definition of this math concept to help you kind of move along in the problem set. Right. So there's a really cool advance, I think, too, here in education. That's going to be a really cool aspect of it. And many, many more things that I'm sure we're not even thinking of yet.
Yeah, to me, this is one of the more impressive updates. I agree, though. The name is kind of stupid, 4.0. I think it stands for something, but yeah, I mean, we're basically achieving the movie Her, which is a little scary. The movie where the guy falls in love with his AI. And I don't know. I can see that happening with Gen Z and younger, basically having less sex, going out less, and falling in love with their computers and their AI girlfriends.
The CEO of Bumble, actually, last week, Whitney Wolf, was saying something to that effect. I think both Match Group and Bumble are actually looking at this as a real product opportunity. They actually want, I mean, hey, if people are going to want AI girlfriends, they can make them. They can make that, a thing. She said it was going to be more, their angle was going to be more about, you create an avatar in your own personality style, and then it can help to, for instance, send messages on the dating app and kind of be an agent for you. But I mean, I think we all know at the end of the day where that's really going, which is AI girlfriends and boyfriends.
Yeah.
Not going to help the demographics. Demographics are going to be a real issue.
Yeah, that's population implosion for sure.
Yeah. It's already a big issue. So now it's like, oh boy.
Yeah.
All right. In other news, the big thing this week was Biden's tariffs on Chinese EVs and batteries. Guys, is the US just scared because we can't compete? I was seeing some videos of some of the EVs in China and they look incredible. I mean, they looked really like luxurious and just had features that no US EV company has. Trav, what do you make of this, man? Is this us running scared, or is there something else in play?
Yeah, it sort of does feel like it's us being a little bit scared and trying to put, the US on an uneven playing field. However, there is an argument to be made that, the Chinese state has been giving a lot of subsidies to these industries, to their green energy industries, giving a lot of subsidies to, solar panel manufacturers and battery manufacturers to build plants and, these EV companies, et cetera. However, we're also doing that in the US. We're giving all these semiconductor companies tons of money to build plants. We've certainly helped out auto industry companies and airlines over time. We bailed them out. So it's not like the US system is pure capitalism either, right? So it's a little concerning because I think as an American consumer, I think we do want more options. We want lower price options, and none of the American car manufacturers are really trying to make affordable vehicles. Maybe Tesla is. They say they're working on a low cost model, but I mean, who else is really trying to hit an under 30K price point on an EV right now? I don't know of any manufacturer in the US that's trying to do that. So that's a little bit frustrating from a consumer perspective. But there's a lot of political angles to this. And, unfortunately, I don't think, the Chinese EVs are going to be allowed in the market anytime soon. What may happen, though, is you may have some of the bigger ones like BYD actually decide that, hey, we still want to access the US market. So we're going to build a factory in the US, or we're going to build a factory in Mexico. So that could be a potential way to bridge the gap. But yeah, it's more of the same as far as US-China relations go.
Yeah. All right, moving on to inflation and macro. So let's talk about the CPI numbers that just came out today. Looks like they cooled a bit. Also, retail sales are showing signs slowing down. Nikki, what's the vibe on the macro side?
Yeah, so I guess bad news is good news, which is why you're seeing the stock market hit all-time highs today. We saw the S&P 500 hit an all-time high. The bad news was that, retail sales were, I believe they were flat, close to flat. Big difference from the past few retail sales reports that we got. Not only that, there are certain things from the earnings side that we were seeing showing softening of the consumer as well. So this is kind of in alignment, but we have seen periods where retail sales have been low, and then the next report, they're right back where they were before. So it's hard to say if this is just a blip on the radar or if this is going to be a whole new trend with retail sales continuing that weakness going forward. But that's bad news. That's good news for the Fed, right? Because the Fed wants to see consumers chill out a bit with spending. Inflation, I think shelter was a part of that, right? Like the shelter started to look a little bit better. I think insurance was still hard. Auto insurance was still high. But I think what Trav and I have been talking about with the shelter component, the reductions in rents that we started to see last year this time, those are going to start to kind of flow in. And it appears that is starting. And the inflation number did not it was on par with what expectations were. We ticked down a little bit, I think from 3.5 to 3.4. Correct me if I'm wrong on that. So all in all, this is all good news for the Fed. It's good news for the market because the market wants to see the Fed lower rates. So we'll see if the trend is our friend and continues for stock market reasons. Obviously, those consumer weakening is not good for corporations and for earnings reasons. So we're back to that mix of data, mix of good and bad that we have to deal with.
Yeah, and let's remind people, I know some people don't know the difference between deflation and disinflation. Just because inflation has been coming down, that just means like the rate of inflation is slowing down, right? So we still have positive inflation. Prices are not coming down. They're just not going up as fast as they were. But I think a lot of people would actually disagree with that. A lot of people are feeling the squeeze out there. And there was a video that I reacted to today that I thought was hilarious and sad at the same time. These two little girls were trying to buy some ice cream, and my God, was it expensive. Let's listen in.
Girls, what's just happened?
So, there's an ice cream van there. Silly. Just 2 ice creams with 2 chewing gums in it.
Yeah.
For bloody £9 for 2 of them.
£9 for 2.
Yeah, £9. That is going to get nowhere. The one that comes with my street is either £1 a piece or £2.
So I don't know how well you guys could hear that, but basically the little girl was saying she's trying to buy ice cream and he wanted £9, 9 British pounds for 2 things of ice cream when it should have cost 1 or 2 pounds. Damn it. Bloody hell.
Look, when the little kids are feeling the inflation pinch, you know we got an issue.
Yeah. Nikki, you were also tweeting the other day about going out to lunch or something. What did you run into?
I was kind of annoyed. I went out to lunch yesterday. Nothing very casual spot, right? $40 for a bowl of ramen and some gyoza and a water. Like I didn't even get a drink. I just got free water. And I was like,
Those are Switzerland prices
I'm
right
like,
there.
damn, for one person, like that's kind of a lot, right? Am I going nuts or is that kind of a lot?
For a bowl of ramen? I mean, that should be 99 cents.
And I know in Austin, our favorite ramen place that we go to, it's the same. Like this wasn't in Austin, but I know that it's the same there. So I guess it's just, I was also listening, or I saw someone on Twitter talk about how they were kind of complaining about Chipotle's prices. Like a burrito bowl used to be $14 and now it's $20 and I didn't even get double meat, you know? So it's like everybody's kind of annoyed with how expensive everything is. And there's not much we can do about it except not spend and then hope that these businesses lower their prices for spurring demand again, right? I mean, that's kind of the cycle, but prices usually don't go down. So I don't really know. I don't know how that's going to look going forward, but I think Americans are tired.
I've seen a lot of posting on Reddit of people revolting against the tipping culture. You know, now people are putting a hard red line of saying, unless it's sit down service, you're not flipping the screen at me if I'm standing up there ordering and I'm doing all the work, which I think is reasonable.
I do want to point out, I wrote about this in the Daily Doe because there's the DoorDash results were actually pretty good. And they are not seeing a softening in the consumer. And most of the people they're DoorDashing from restaurants and food out, right? Away from home. So that is kind of interesting when you think about it, because that's going to be more expensive. There's going to be fees tacked onto that. You have to tip. And it's like, but people just can't stop DoorDashing and Uber Eating. They just won't stop.
It's so easy
laziness
and so convenient.
is a driver.
Yep.
Yeah. So I guess there's like good and bad out there in terms of the spending, because you've got DoorDash doing great. You've got Uber Eats still seeing pretty healthy growth on their delivery side. And like I said, you know, them seeing strength in the consumer, but then there's other areas that they are seeing weakness. So it's just a mixed bag out there. And we still need to see what retail earnings look like from a lot of those discretionary names.
I do think, you know, a lot of the consumer companies, consumer food companies and restaurant companies took price up very quickly back in 2022 and 2023 to deal with their cost input inflation. And they took price up so quickly. I think that's one thing that's shocking consumers. But there is some pushback here in terms of, you know, if demand does start to weaken, and we've seen a couple of companies like Starbucks calling out that their casual consumer is pulling back a little bit. They have seen lower volumes there. Maybe Starbucks is also having some competitive issues, but, you know, overall there has been some weakening. I think there was another company like Portillo's that, you know, is in the Midwest, and they've seen a little bit of a pullback. So I've seen a few companies in the restaurant space starting to suggest that things are slowing a little bit. And so if a big part of that is the price increases that they took, then eventually I think what will happen is, you know, prices will have to stay flat for a while as consumers kind of catch up with their incomes. Or you might even have some companies actually start to use deals to drive traffic. And that could be, especially if we get into a softer economy, you know, companies using their dollar menu. Although these days their dollar menus are more like the $5 menu. But I do think we'll see more of that. I think we'll start to see companies using discounts again as a way to lure people in as the economy softens up a bit.
Interesting. Yeah, hopefully we see more of that.
Yep.
All right, let's take a look at the charts, guys. We've got stocks making a run for all-time freaking highs right now, baby.
Woo!
Yeah. So it's funny. There's still so much bear porn on Twitter. You know, everybody's saying, "Oh, this is 2008 again. This is 2001." Is it? Who knows? But they've been saying that during this whole run up for the past like 10 years. So anyway, yeah. I mean, we are in a melt up situation right now. We're just, you know, a point or two off of all-time highs for stocks. We've got Bitcoin that is a few points of all-time highs. We'll do some TA analysis, give our opinion on the stock market. Guys, is it GME that's driving the S&P 500 and the NASDAQ to all-time highs, or what's going on?
The
What
meme
are
of
we seeing?
wish.
Not at all. Not at all. I mean, look,
No.
the reality is, you know, consumer balance sheets, I mean, we're still at all-time high levels in terms of consumer wealth in the US, even though we've had all these problems with inflation, you know, even though we have economic concerns and geopolitical concerns and all these wars happening and all these things that we can, you know, create fear about if we wanted to. We don't do that, but other people do. Even though all of that's out there, if you look at the data, it's not bad. You know, corporate earnings are growing. They have been growing for the past couple of quarters now. And so with consumer balance sheets in aggregate, at least being quite healthy, you know, and you've got corporate earnings growing, why wouldn't you see new all-time highs in stocks? And you also have big tech companies that are, you know, global companies that have been focusing on efficiency and increasing margins. So companies like Amazon and Google put up great earnings reports, you know, and they're a big part of these large indices. So those are the kind of things that are really driving these indices higher. And then also now, you know, this week we're seeing yields decline with a little bit less of a hot inflation print. That helps on the margin, of course. So the soft landing scenario is still in play. And I think that ultimately means that stocks can continue to do well, but we're going to have pullbacks along the way, of course. So that's my general read on it all. At the end of the day, I think, you know, you got to put the bear porn aside and just realize that, you know, over time, this is what markets do.
Well, and as we say, price action is truth, right? So all the fear that's out there, it's very easy to see through it if you just look at the price action on the chart. And like you said, Trav, the data on the fundamental side. And it's not all roses and sunshine and rainbows, but there is positive growth. People are spending money. Nikki, is the consumer still looking good, or what's the vibe on that side?
I think the biggest concern right now is the lower income consumer and the credit card delinquency rates starting to tick up. So credit card delinquencies have I don't have the chart on me, but if you look at the chart, you can see that we're clearly seeing, you know, an uptick with people moving into 30 to 90-day delinquent status. Now, when we look at the overall numbers from the banks, like charge-offs, Trav, I don't know if you looked at that. I'll have to update myself on that from the last earnings season that we got from the banks. I don't know if that's gotten concerning or if it's still kind of manageable for the banks. But
Charge-offs have definitely been rising over the past few quarters, but they're still at very low levels. The delinquency rates have been a little bit of a concern. They are actually, in some cases, for some banks, above 2019 pre-pandemic levels, and so there has been a pretty rapid rise in delinquency rates. But you kind of nailed it at the beginning when you said it's really an issue at the lower income, you know, quintiles and deciles, and so it's the lower income consumer that's really hurting. But even there, I mean, with unemployment rates still at about 4% in the US, you know, most people are still okay. You know, maybe their budgets are starting to get a bit more stretched with inflation. Obviously, you know, we've got to pull back on some things, you know, as consumers in certain areas. We have seen things like boat sales fall off. So we are seeing pockets of weakness, but again, that kind of aligns with the soft landing. It's like we're not in the strongest economy ever, but we're also okay, especially when you look at, you know, most of the consumers above the top half. So that's kind of how I just give the general picture. Of course, valuation is another thing that we haven't talked about, and that is, you know, that is maybe a bit of a concern.
Okay, let's move there. I'm going to assume you're thinking that maybe valuations are a bit stretched considering where we are and where the consumer is and the softening that we are seeing. What are your thoughts on where are we trading at this point? PE
I mean,
wise,
we're right around 20 times earnings on the S&P 500, which is
Okay.
not like it's not like 1999, 2000 bubble.com levels, but it is above the 5 and 10 year averages. And so when you start to get above those levels as a stock investor, you just think about risk reward. You don't really expect to get a whole lot of extra juice from valuation multiples expanding at this point. You're really going to have to depend on the level of growth. And so if we are in a, soft landing economy, growth is probably not going to be super high. So you could have things start to flatten out, unless growth does reaccelerate.
Yeah.
All right. Well, yeah, I mean, I know credit card balances are close to all-time highs, but I think that's to be expected, right? With inflation and
Yeah.
with, people just having to go into debt. So I think maybe that is a potential black swan to keep in the back of our minds. But as of right now, S&P making a run into the afternoon session towards these all-time highs.
Yeah, and we also have to think about the wealth effect with all of this too, right? We have to think about how higher interest rates are kind of a form of stimulus for the wealthier individuals and the savers, and they are probably propping up a lot of the spending. I mean, even if I looked at Darden restaurants and I looked at they own Olive Garden and Longhorn Steakhouse and some high-end, high fine dining chains, and the stark difference between the growth rates of the fine dining chains growing at 58% year over year, and what was it? Olive Garden growing at 1% year over year. It's like you can clearly see the bifurcation between the haves and the have-nots, so to speak, in this economy. So I think that's something that could also be kind of contributing to things may not be so great on the lower percentages of income earners, but the higher percentages, they might be just propping this up, or the boomers that are flush with cash, they could be propping some of this spending up. So there's kind of this possible buoying that could be happening in the economy here.
Interesting. Well, we'll keep an eye on the stock market as it continues to run into the close today. Let's jump over and talk about crypto. So we've had some big news come out this week, some good, some bad. Crypto, as far as price goes, Bitcoin is lagging stocks right now. You can see the S&P actually had what I consider a popped stop run or a short squeeze over the past week as the S&P and the NASDAQ broke back up above that 50-period moving average. You can see price, whenever it does that, it runs from major area to major area. So that's why it's at an all-time high today, or getting close to it. I think that we have potential for a similar type move here on Bitcoin. You can see that it's now, as of right now, tagging that 50-period moving average as resistance. It bounced off of the 100 as support. And I've been telling everybody in the community, like, hey guys, this is a squeeze zone. It's where, price action is getting tighter, the volatility is getting lower, and then what happens next is an explosive move. I think the probabilities are higher. Obviously, there's no guarantee, and we're at resistance right now. But if we look at the pivot high here, I think that this is a area through like 66 or 65K to 68K, where there are a lot of stops for shorts that are put in there. And what that means is, like, anybody who's short right now, if you look behind these prior pivot highs, this is probably where they have their buy market orders. So if we blast through this 65K resistance, I think we could be back at all-time highs pretty damn quickly. So that's what I'm looking at over the next like 24 to 48 hours is Bitcoin going to play catch up with stocks and give us that same kind of pop stop run that we saw over the past week or two in stocks? Or is Bitcoin actually going to play catch up with that?
Yeah, this is getting interesting because it feels like the S&P can't go that much higher, when you look at valuation and look at everything else that we've talked about. But man, the market will surprise you. So I wouldn't be surprised to see things get kind of nutty in risk assets going forward. Of
Yep.
course, that brings a whole new need for caution, but it wouldn't shock me.
Yeah, and look, we're still in altcoin season too. We've had a lot of capital that's still flowing into alts. A lot of them had pretty gnarly pullbacks, but there have also been some good bounces. And I don't think altcoin season is over quite yet. I think, we haven't seen any real signs of like euphoria. We've seen some frothiness, but we've also seen some shakeouts. So will we keep going? That's unclear. Well, one other thing that I wanted to mention is we are in the full on like fight you phase globally against crypto. It has become very clear that this has become a partisan issue. You got Senator Warren with her anti-crypto army. We had Trump over the past week that came out kind of in support of Bitcoin. Whenever I watched the video, I thought he was just kind of pandering. But hey, if it is going to be a partisan issue, if the right is going to embrace crypto and the left is going to, push it away or try to kill it, I think that's really stupid for Democrats to do. Even Mark Cuban, who I believe is a pretty staunch Democrat, came out and said that, the Dems anti-crypto stance is probably going to cost them the presidency. So will this be the first Bitcoin election, or, could this be a tipping point that actually decides the election in the states? That's one thing to think about. The other thing to think about is how governments are going full bore anti-privacy. We've seen major prison sentences getting handed out. This week, it was the Tornado Cash developer that got, 64 months in prison. This was by a Dutch court. And then we also saw, Samurai Wallet that is getting attacked as well. This shit is scary, guys. This
Are
is
those
really
privacy
bad.
coins? Like, for people that don't know what Tornado and whatever you just said, like,
Yeah.
what are they?
Tornado Cash was a place where you could basically mix your crypto and obfuscate ownership and the trail. Now, I'm not going to say if that's right or wrong. I believe in privacy. I think that's why Monero has been delisted on some US exchanges, any privacy focused coins. So there's a big difference between like a privacy focused coin like Monero and a mixing service where you can mix either Bitcoin or Ethereum or other coins. And then Samurai Wallet, which is again just a self-hosted wallet, is being demonized by the left and Democrats in the US, trying to ban self-hosted wallets, which would be the stupidest move. I think that would be political suicide. But I think this is a big battle. And I'm pro-privacy. I actually tweeted the other day, I said, privacy is not a crime, but I'm not surprised to see governments going after this kind of stuff because money laundering is a much more serious threat to their power than like securities laws, right? So over here, you got Gary Gensler being anti-crypto, suing everybody. That's a very different thing than attacking this privacy stuff. So the anti-privacy is coming from the very top. And the securities stuff is just kind of over here. I mean, it's important. We don't want fraud in the financial markets, but Gary Gensler's anti-crypto is like just a totally different thing. So I don't know. I'm just super against this.
This is a challenge because like in the US, we don't really have privacy with the banking, right? They want your address, they want your address updated. You can't use a PO box, have to use physical. There's like all these, if you take out more than 10,000 in cash, they're going to want a record of that. They're going to want to document that. So it's like, I guess there are already a lot of things in place in the current financial system for Americans that go against trying to have privacy. It's very difficult. So I guess I can't say that I'm surprised that they want crypto to follow the same rules in terms of staying in line. We want know your customer laws, essentially. So I guess that doesn't surprise me that they're going to try to go after that. Yeah. Not that it's right or wrong. It just is what it is. And it's happening in the traditional financial system. So why wouldn't it apply to crypto too? Unfortunately. Because
Yeah.
I do think privacy is important, but it's getting harder.
Yeah, I mean, we could debate this a lot. I just want to say, like, I think it's stupid for governments to be so aggressive, and I don't know. It'll be interesting to see the election and how big of a role Bitcoin really plays in this election, to see how big of an issue it becomes.
Yeah, I was just actually looking at that, the prediction markets and the betting markets for the U.S. presidential election, and they're still running pretty close. Most of them have Trump anywhere between like a 50 to 56% chance of winning versus Biden in the 45 to 50% range. So it could still be very close, but these swing issues could very well make a difference, particularly among certain voter blocks and particularly in certain states. So that's going to be really interesting to watch how this plays out.
Grab the
I
popcorn.
say interesting, but what I really mean is incredibly frustrating.
Yeah.
Yeah. I mean, I just think it's so stupid for, maybe I can pull this up, the ad where Senator Warren's looking all stoic off to the side. She's like, I'm building an anti-crypto army. It's like, who the hell are you trying to pander to? Who is super anti-crypto?
A lot of people are anti-crypto.
Yeah, maybe I'm in my own little echo chamber, but I just think it's such a stupid ass position to take, man.
Yeah, I think you might be, because there are a lot of people that are still like, crypto's a scam, crypto's stupid, anyone investing or messing with it. There's even financial professionals that won't touch clients, CPAs and financial advisors that won't even touch clients that have anything to do with crypto. It's like fascinating to me.
That's true.
Yeah.
I mean, I actually reacted to this guy, I think his name's Chris. He was giving a speech at OSU, and all of the graduates were starting to boo him whenever he mentioned Bitcoin. And it's funny because he was actually trying to explain like the skills and the stuff that it takes to be a successful investor. And people are like, no, we're not going to be open-minded. We're going to be closed-minded. So yeah, you're right. I am in an echo chamber, and there are a lot of people that are still stubbornly against crypto. But hey, we need those people to buy a lot later down the road.
I do think that it is the partisan issue at this point, just in America in general.
Yeah. And look, I'm politically homeless. I'm not right or left. I don't give a shit. But if there is one party that's like, hey, we're anti-crypto, to me, that's anti-freedom. That's anti-sovereignty. That's just a really anti-American take to have.
Yeah. The crypto peeps will not be happy about that for sure.
All right, let's move on. Next crypto topic is actually something that I think is interesting. I've avoided talking about this too much because there's just a lot of scams around this. So there's a big debate. It's not even really a debate, but it's becoming a hotter topic of, is it better to sell Bitcoin to either retire on or use as living expenses, or should you lend it out and avoid paying taxes? And there have been some crypto YouTubers that have come out recently, and they're like, you're an idiot if you sell your Bitcoin because you should just lend it. And I'm like, wow, that's a really ignorant take, because look at how many people lost everything with BlockFi and all these other lending schemes. So when you lend, or if you get yield from lending, there is no free lunch. So there's always risk in the system. So it doesn't matter if you are paying taxes by selling. That is just a higher cost, lower risk way to get liquidity out of Bitcoin. Or if you are borrowing or lending and paying interest, there's risk on both sides. There's cost on both sides. Now, one thing that I thought was interesting this week was there's a new startup that just raised a few $1 million from Tim Draper and a few other crypto-friendly folks, even Binance, Zest Protocol. The biggest problem on the lending side has been counterparty risk, aka BlockFi, right? Which imploded and lost billions of dollars. I actually have an email chain where they were hounding me for months and months trying to get me to promote, and I just ignored them. Maybe I should publish those emails, because they were like, Chris, we'll pay you to promote this. And I know a lot of other guys did. I'm not going to mention any of these crypto influencers by name, but I refuse to. I don't promote high risk stuff to people. I never promoted FTX or anything like that. But I am pro protocols that eliminate or reduce counterparty risk. So I've been doing some due diligence on Zest. This is not a promotion of them. I just think maybe this is like headed in the right direction. So we'll see what this turns into. But I think it would be awesome to have lower risk options for people to lend their Bitcoin if they didn't want to sell and get access to liquidity. But I just also at the same time want to tell these other crypto YouTubers to pump the damn brakes when you're telling people they're idiots for selling Bitcoin. What are you doing? Like, it's okay to get liquidity out of Bitcoin to live or to retire, and to demonize people for doing that is silly.
Yeah, we could also just take the crypto thing out of it. You can like, if you look at this just from a purely financial perspective, think about it from like a portfolio of financial assets. Like if you have a big portfolio of stocks and bonds or traditional assets, think about how you would manage that, right? So you've got this portfolio of assets you think is going to still appreciate over time that offers inflation protection. But in many cases, you're still going to need capital to live on. So how do you manage that? It's the whole like conversation about withdrawal rate versus, the interest rates that you're getting by lending or borrowing. And it's a whole, analysis. This is what Nikki does all day, right? This is the whole financial planning subject. And there's no easy answer as to you should do this or do that. It really depends on the individual's financial situation as well as the prevailing rates in the market and things like that. So there's so many variables to just have a one position on this is just very short-sighted.
Yeah. And it is funny seeing the YouTubers that have been pushing this. They're like, it's so much better to do that. And then people are like, all right, well, what are the options to do it? And they're like, crickets. It's like, well, there's really not great options. So they're like, they're super pro this like thing that doesn't really exist yet. I don't know.
Yeah.
It's strange.
Yeah.
So
I mean,
it's
similar to like you can take out a loan against your stocks, right? But we're dealing with brokerages that have been around for a very long time and are they have the right insurance in place that's federally backed, and they also are just more trusted entities. So that's what crypto's missing for that. I'm not saying you can't take a loan against or lend out or whatever. Maybe one day all of that will be in place with crypto and it'll be more trustworthy. It's just that the trust is gone, and I just don't really know what it's going to take for the crypto space to kind of get that back. I think it's risky. Yeah. It's just too risky.
Well, and there are startups that are trying, and like I'll mention another one. I have no affiliation, but unchained.com, they have options. You guys can read about this. I don't like mentioning too many crypto companies because I don't want people to think I'm encouraging them to use anything specific, but
yeah,
I mentioned this to say there are companies that are trying, but there's no free lunch, and counterparty risk is the biggest problem in the crypto space when it comes to lending. And if we can
one day they'll fix it, probably, maybe, but
multi-sig wallets help, so there is innovation, and there is like more quote unquote trustworthy things that are coming down the pipeline. But to just put out blanket statements telling people never to sell, it's like those are usually the people that panic sell the lows anyway, as the people that beat the hodl drum the loudest. You guys would be surprised, the OG Bitcoiners I know that fucking panic sold bottoms. So be careful who you're listening to out there. All right. Anyway, got a little heated there. Let's move on to some Q&A. All right. First question is from Kevin. Let's pop this up. He says, hey guys, I'm considering adding to my Tesla longs from here. Elon reiterated huge news for AI, robotics, and new models. Essentially, Tesla is a robotics AI rocket battery company. Many analysts argue that it should be valued in the $500 range per share. What do you think, Stock Geek?
Well, there are also analysts who believe it should trade at $50 a share or lower. So I wouldn't base your decisions based on analyst price targets. Sell side analysts are notoriously like pro-cyclical. So they upgrade a stock on the way up and then they downgrade it after it's already gone down. So I wouldn't use any analyst price targets to justify a buy or sell decision on any stock. I just, I will look at those and I will read research reports from them. But I think their price targets are essentially worthless in most cases. So I'll say that out of the gate. That's really on any stock, including Tesla. For Tesla specifically, though, again, Tesla really comes down to what is your time frame, because in the short run, things do not look good for Tesla. Like Tesla's having one of its hardest a couple of quarters here that it's had in several years. Last quarter, they reported earnings that were down significantly. Revenues were down, deliveries were down. This quarter is trending slightly better quarter over quarter based on the data that we currently have, but it still could end up being flat or down from last year's second quarter. So Tesla's having a tough year. They're in tough transition. There's a lot of question marks about the current results in the current business. And I think if you look purely on today's numbers, the stock looks overvalued. However, if you're a very long-term investor and you're looking to hold this and you have the stomach to hold through drawdowns and you can hold Tesla for 5 or 10 or 15 years, and you believe that they're going to pull off success in things like humanoid robots and in full self-driving and robotaxis, then the stock probably does have quite a bit of upside. But again, it's kind of one of those situations where it could draw down easily 30 to 50% from here, just based on what's happening in Tesla's business right now this year. If you put too much stock in future things that don't play out, that could create some downsides for you. So you have to be careful about risk management and position sizing as well. So I do think there's long-term upside potentially for Tesla, but there is a lot to prove and a lot of execution that has to happen to get to those levels.
Yeah, I like how you said that. Like, you can be bullish on the long-term success or like rooting for a company, but that doesn't mean that it's a buy at today's prices, right? Those are two very different things.
Yeah. And so, one approach we talk about a lot too, like if you have a situation like this where you're longer term bullish, but you do foresee that there could be some shorter term headwinds. So, maybe you want to have a little bit of exposure. Maybe your plan is to DCA into it over time to just make sure that your average cost basis is a price that you get over a period of time where you can evaluate the results rather than going all in or all out on a stock like this.
Hear, hear. All right. Next question. Michael was asking, I work for MicroStrategy. Okay, awesome. That's the first MicroStrategy employee we've heard from on the show. I recently received restricted stock units. I'm wondering whether to sell them and buy Bitcoin instead to remove the risk associated with the company. I'm also struggling to understand the concept of leverage. Some people say the stock could perform better than Bitcoin. Any thoughts on that? Thanks, Michael. Nikki, that's one for you.
Yeah, let me start with the RSUs. So restricted stock units, they're issued by companies to their employees in lieu of compensation. So your salary might be 100K of actual cash salary and 100K of restricted stock units. I've seen this a lot with different clients that I've worked with that have RSUs. And so what happens is you're granted those RSUs and they eventually vest. And what you need to pay attention to is what your cost basis is that they vested at. Because when they vested, they should have been moved over to your tax return and you would have paid taxes on the value of those shares. So that gives you your cost basis. So you need to go back, you need to find out, okay, well, what price per share am I in these shares for? Because you don't want to let the price, if you're, you basically that's cash, that's income that you receive from your company. You need to treat it as such. So think about it this way: if that was just cash received to you, would you take that cash and go buy MicroStrategy shares? Would you want to be invested in MicroStrategy if you had just cash and could make any decision you want and buy any stock you want? That's essentially what you're doing. You're being paid cash. You're forced into MicroStrategy stock, but you don't want to let that stock go below your cost basis. So there's some strategy here with trying to make sure that your allocation is suitable for your risk tolerance. You don't want to end up with too many RSUs and too much of a position in MicroStrategy, taking on too much risk considering where you're at. So there is definitely a case. What most people do is they sell the RSUs as soon as they vest because they don't want to take the stock price risk. So it really depends on your cost basis, where the stock lies today in terms of price, that you're going to kind of make that decision on what to do. And if you actually want to be long MicroStrategy going forward. So as far as the RSUs go, that's just kind of the quick lowdown on that. And then for the what was the second part of the question? Leverage or
I'm also struggling to understand the concept of leverage. Some people say the stock could outperform Bitcoin. Yeah, like it's basically like a higher beta play on Bitcoin.
right.
Yeah.
And Trav could explain that really well. But basically, MicroStrategy does, I believe, move bigger percentages at times than Bitcoin. Correct?
Yeah, both on the upside and the downside. And a big reason for that is because MicroStrategy actually has financial leverage on the balance sheet that they've used to acquire Bitcoin. So they've taken out a significant amount of debt, several billion now. I think it's somewhere between 2 and 3 billion, last I looked, of debt that they have taken out to buy Bitcoin. And so there is financial leverage. There are situations where if Bitcoin were to go to, below 10K, where they would be underwater and they'd have to pay, they'd have to find a way to pay off that debt with Bitcoin that's valued at, not enough to even pay off the debt. So, that's why we say it's a levered play on Bitcoin. So in some sense, it's again, goes back to your view of where you think Bitcoin prices are going to go in the medium to long term. Now, with a person who's an employee, like you said, Nikki, there's an extra added layer of complexity here because you're already taking some career risk on being at this company. And do you want to add the extra financial risk of having, a significant portion of your wealth in that company's RSUs? And so that's a decision you kind of have to make depending on what your opinion of the company is. The tax issues that you mentioned, where did your stock vest? Is there going to be massive tax bills you have to pay because of that? So there's
Right.
several factors you really got to consider. And yeah, I mean, I would say overall though, MicroStrategy, we do see as a higher beta play on Bitcoin for better and for worse. So it makes the upside opportunities higher, but it also makes the downside opportunities more significant.
And I do
Yeah.
want to say very quickly, a lot of mistakes get made with RSUs. So if you feel like you don't know what you're doing, you need to get a professional to help you who has experience with that, because you do not want to make those mistakes. They're expensive.
Yeah. And I know, Nikki, I mean, you've worked with people with RSUs from like SpaceX and Meta and stuff. So if anybody out there is looking for help, maybe they should just reach out to you.
Yeah, feel free.
Awesome. All right. Last question. Andy, he was saying, hello, I am curious if you have a blueprint for making money online or with trading. Not any guidance of where to learn would be greatly appreciated. All right. Thanks, Andy. So, come to our community. Go to wetalkmoney.com/community. We've got a bunch of courses in there, talk about different ways to build wealth with investing, trading, entrepreneurship. We've got people in the community that are building businesses, that have sold businesses, that are full-time traders or professional investors. So yeah, shameless plug for the community. Go check it out. We've got a bunch of free courses. We've also got premium courses. We do live events, all that fun stuff. So yeah, if you want to learn how to build wealth, make money online or through trading, come check us out. All right. What are you guys looking forward to for the next week? And while you're thinking of that, I'll also just give a plug for the show. If you want to ask a question and have it featured on the show, go to wetalkmoney.com, submit a question, and we might read it at the end of these shows. So I know for me, over the next week, actually over the next just couple of days, I'm looking for this short squeeze potential on Bitcoin to see if we're going to break out of this squeezing triangle and head for all-time highs. That's basically it. And then after that, that will determine if I start looking for more altcoin trading setups. What about you guys on the stock and macro side?
Yeah, really, really interested in how this, new risk-on environment proceeds with, especially with regards to meme stocks and how those are going to drive other stocks in the market. So I am just glued to my screens to figure out what the hell's happening here with GameStop. Is this the real roaring kitty? Is there news to drop? And what does that mean for all of these other stocks that have been moving over the past couple of days? Because if there's more to come, then it could get even wilder out there in a lot of stocks.
Here. All right, Nikki, any final words?
For me, retail earnings, we heard from Home Depot. We are going to hear from TJ Maxx, American Eagle, Kohl's, Abercrombie and Fitch, eventually Ulta. So just kind of seeing where these big retailers are landing with consumer sentiment.
Cool. All right. Well, Well, guys, thanks for watching the show. I know this was a little bit of a longer one. Again, final plug for the community. Go to wetalkmoney.com/community. Jump in the Discord, the live classes, hit us up, ping us, let us know your questions, and stay safe out there, guys. There's a lot of volatility. There's a lot of euphoria. There's a lot of fear. Stay disciplined, plan your trades, trade your plans. We'll see you guys next week.
See ya.
Take care.